chapter. So in this chapter I'll be discussing institutional support and resistance. So what are institutional support and resistance? We know that resistance and support are usually zones, right? So this is what we know about support and resistance. Now this will be your support and resistance in the retail space, right? So these are your retail support and resistance. So I'll use SNR for support and resistance. So basically is that when price reach a certain zone, price should go down, and when price hits a certain zone, it should go up. So when price hits that zone, we say it's support, and when it hits that roof, we say it's resistance. So this is the retail support and resistance. So what are the institutional support and resistance? So we have what's this, a candlestick, right? So a candlestick will have a high and a low. So this is the high and this will be the low, right? So every candlestick's high, every candlestick high and low, these are your institutional support and resistance. So meaning this will be your resistance, and this will be your support. Let me do this. So when trading, my style is that every high it will be your resistance, and every low it will be your support. It sounds dodgy, right? So now these are institutional support and resistance, right? So every candle's high is your resistance, and every candle's low is your support. So now how do we use this support and resistance, right? So these are support and resistance, they are precise, right? So meaning they will give you a precise price level, right? A precise price level, and this one will be your precise price level. So your institutional SNR is equals to your precise price level, which is also known as PPL. So remember I said each and every high is your resistance, each and every candle's low it will be your support, right? So now in this case we won't be using support and resistance, we'll be using precise price level, PPL, right? Because why? This support can change and become resistance, while this resistance can change and become support. So PPL will only work if you have two consecutive candles, right? So this is when we are going to apply our true support and resistance, not the retail one, right? This one, and I know no one is talking about this one, so this will be new. This is new, right? So now how are we going to apply this? So we need two consecutive candles, right? So first thing first, let me do this. So as you can see that you need two consecutive candles, right? So in this case, let's say we are bearish, right? We are bearish, and then we have this um, support, which in this case it will become resistance. So now let me use PPL instead of, so you will have your PPL there. As I told you that support can become resistance and resistance become support, so this is why I use PPL instead of support and resistance. But these levels, they will act as true support. They'll act as true support. So now let's say we were bearish here, all right? The candle opens here, let's see, it opens here, it goes up, and then it goes down, right? So this means that price should take this PPL, right, and come back to the opening price, then goes down. So according to the basics, and then it should go down, right? So I've marked this area. So this is our trading zone, meaning this is our range, right? This is our previous candles range, so the high there and the low there. So this is our trading area. So sometimes it can happen that it goes somewhere there and then it comes back and closes bearish. So now I'm going to give you conditions on how to apply the PPL, how to use the PPL. So our time frames won't change, our time frame alignment won't change, they will remain the same. So let's say you're trading, you're using your weekly as a higher time frame, therefore you will trade the weekly time frame on H4, right? So meaning you must wait for H4 to breach this level, right? So sometimes we use PPL to anticipate a swing or a reversal. One, it's either it's a continuation, we use PPL for continuation. Two, we use it to anticipate what? A swing or a reversal, our reversal pattern. So we use PPL for two reasons. Now let's say this was our weekly candlesticks, right? So, and we observe something like this. Let's say this candle opened here, right? It went down, then it went up, and then it's still active, right? Still active. But on H4, remember this is a weekly time frame. So on H4, this candle is active, right? And it closes, your H4 closes above this PPL. So now this is H4. Let's say this is now H4. when this closes above the PPL, I'm expecting now this price to act as support. So meaning price will open there, it will go down to this level, and then it should go up. Remember, these small candles are H4 candles, while these big ones are your weekly candles. So this is how we use PPL, right? So meaning now this is our weekly candle, right? This big so let's say it went down first and then still active, right? So when you get a close above this, we are expecting this price, this level, to balance price. So on H4, price will open, it will hit this zone, then it will go up. Remember, this weekly candle is still active, right? So it's still active. So when this closes above, when H4 closes above the PPL, you must look for an entry here. So where will your stop loss be? It will be on this candle that closed above the PPL, right, on its low. This candle's low will be your stop loss placement, but you can refine that to M15 because we trade H4 on M15, right? So now here we can anticipate a swing. Can you see that? Let's say this one, it's not so you can anticipate a swing. Remember, the big triangle represent our weekly candle, right? So the small ones are our H4 candles. So expect something like this. So this is how we use PPL, right? And then let's say we have right, we have this weekly candle, it's active, doesn't matter, it can be a new weekly candle. Let's say this one closes here, right, on this week, and then next week we have price goes down, then it goes up, right? So on this level, do you see this level? You can stretch that, and then when your H4 is active here, no, your weekly candle is active here. Once we get H4 candles closing above, you can use the same logic. You will wait for price to open, trades down to this PPL, and then it should go up. Your stop loss, it will be below this candle's low. So remember, this is weekly, right? The big candle there, and this big rectangle, it's also weekly. So on H4, when you close above, this should support price. So this will be our PPL, meaning it's our true institutional support and resistance. So let's say you have an H4 here, right? You can still stretch that low or high. When you close above it, know that we must come back to that level, then go up. So PPLs can be used for continuations, right? Or they can be used for reversals. So in this case, we are reversing price. Can you see that? As I've said, that each and every candle's high and low, it's your resistance. So you can also use this candle's high. You can also use this candle side there. So meaning your weekly will do what? Will open, bounce back. So if you are bullish, it must close above, right? It must trade through and close above it. So it can be a series of candles. It can on H4 can be a down close and then followed by an immediate rebalance, or a series of candles closing above this PPL. So here I've combined the weekly, right, and the H4. So you can use the daily and H1, H4 and M15, M15 and M1, monthly and daily. So let's say if these were monthly candles, right, I was going to look for daily candles. They should close above or below. So PPL can be used for reversal, and it can also be used for continuation. So we use PPL to anticipate swings, swing highs and swing lows. So the opposite will be true for what's this, for the downside. Let's say we are going up, we want to change, so we just flip this, the whole thing there. We just flip the whole thing. So in the next lesson, I will delve into the immediate price rebalance. So this is when we should be careful when using PPL, right? So you can have that break, then price rebalances immediately, right? So we should be careful. I will teach you on how to go about it. So let's go to a chart example. Remember, the most important thing is to identify your bias, your weekly bias, your daily bias. If you're an intraday trader, and if you want to hold for 2 to 3 days, you need to know your weekly bias, right? So whenever I introduce something new, guys, please don't focus on that thing. Remember the basics, right? So this is another way of trading. So I'm simplifying things for you, right? So this was our analysis. Now as you can see that we have this candle, we have this candle, we have this candle, right? And then we traded above this candle. So this was your weekly PPN, right? So this candle opened yesterday, Sunday at 11. It went down, then it went up. So this PPL is still valid. Why? Because we have a rejection. So a rejection simply means this simply means it's an empty void. So it's like a gap, right? So yeah, this is not a good example, but I hope you understand. So this is the full body, this is a body candle, and this is also a body candle. So from here, the low of this candle will be our PPL, right? So this will be our weekly PPL. So when you go to H4, this is 569. When you go to H4, okay, so as you can see that we closed above this PPL, right? So this candle it's a void, right? It's a gap. We closed above this candle, this above this PPL, right? The weekly PPL, as you can see, W1, which stands for weekly PPL. And then what happened here, we had that innate test, and then boom, it went up. So here on H4, as you can see that I've marked this level, right? So this is the candles high. We need 2 consecutive candles prior to the current one, right? Or this candle, we can use this. This is also PPL, right? This is also PPL. So I will only use this level when price it's around that level. I will also use this when price is around that level. So PPL, in other words, it simply locks in. It locks in your trend, right? Or your reversals. So here we have our H4 PPL. So for now, let's do the basic one, right? So on which time frame do we use to trade H4? We will use the M15 662, as you can see there. Okay. Now we don't have any close below this H4 PPL, right? So the H4 candle started at 11, so this was the start of the H4 candle. So we don't have any close below this level. So if we get a close below this level, right, I will expect an immediate rebalance on this time frame on M15, and then my stop loss will be above this candle's high, the one that broke, right? Sometimes you'll have price closing and then an immediate rebalance, or you can, so it will be a down close and up close, but the most important thing, it is this level, right? So we can go on and on. As you can see, this is our PPL. Let me remove this. I don't want to confuse you. So this is our PPL there, right? So we trade M15 on which time frame? On M1. Let's go to M1. As you can see that we closed. Let me go to M15 again. So this candle, right, it was it's closing in 3 minutes, so it was the 130 candle. 130 candle. Let's go to M. This candle opened here, it went up, right, and then it closed down. As closed down, this was our first close. We had an innate rebalance. This is what I'm talking about. Remember, this is our M15 PPL. PPL M15. So we closed above, we went down, closed above our immediate rebalance. So we had like 1, 2, 3 immediate rebalances. So then price went down. So this is how we use PPL, because here we wanted to anticipate a reversal. As you can see, a swing, right? We have a swing there, then we want to anticipate a reversal. It can be a minor or a major one, doesn't matter. You can go here right? So this is also your PPL. When price is close to this one, that will be your PPL. This is your PPL, right? You can stretch that in time. So if we close below this one, this H4 PPL, then I can take shorts. So this is how we use PPL. See this 1 2, this is your PPL. This is not your QML, guys, it's different. So this is a PPL, and then when price it's somewhere here, this will also be a PPL. So on M1 you'll have an immediate rebalance, then price will go up. Then here we can stress that that's your PPL as well. This is a PPL. I think it was waited for this candle. This is also your PPL. It was waited for this candle, not this one, for this candle. And then you can see, guys, you can see this is a PPL there. So you can see reversal, swing. You can use this as your PPL. You can also use this one as your PPL for future price. So PPL are your true institutional support and resistance. So this is how we use institutional support and resistance. So I've shown you PPL. So do not focus on PPL only. So let's say you take a trade, you take a short, right? So you can use PPL to determine how far price will go, right? So please do not forget the basics and stick to this model only. Remember, you must use PPL with your buyers. So PPL will help you with your weekly reversals and your daily reversals, or any reversal. So I can take this, put it there, right? So if we go above it, I will have to go to M1 and then look for something like this on M1. Okay, I'll go to M1. So remember, PPL can be used as continuation or as what, reversal. So price can go, okay, let's go to M1. So this is our zone then. So do not hurry and try to buy this, right? This is our M15. So we can have an immediate rebalance if it's a continuation to the downside. So what else do you see here? A swing, this is to supply this candle. You must cover the high, right? Because this candle's high is shorter than that one, so you must cover the high. So it can be a series of candles or one single candle. You made rebalance if it's a continuation to the downside. As you can see, I didn't speak about SMT and other things. I said do not forget the basics, your supply, your demand, and etc. So I didn't talk about SMT. So there was no tapping of this level. Okay, so it's okay, you can let it go. This is a M1 PPL. Can you see that? Approximately. Okay, this is a swing. Can you see that? This is a swing. That's a supply there. So it came close, didn't take us in. Okay, guys, practice this on a live market. So they came close to this, but they failed to take us in. So it will happen at some point. Okay, here we have a situation. So which PPL do you have to choose? Is this the right one or this one? Is this the one or this one for higher prices? So remember what I've said, bias, it's important. Bias, you need to follow bias when using this system. Okay, so remember this, our M15 PPL, you see we came to this level and then they went up. So just imagine if this was your M15 was a higher time frame, this move on its own, it's a decent move. This, remember when you marked this, right? see they've validated this one, so they can use this as what? Support. It was supposed to be resistance, right? This M1 PPL was supposed to be resistance, so they validated this. This can be used as support. So yes guys, this is it. This is how you use your true institutional support and resistance, not the classic one or the retail one. So yes, cheers, see you in the other video. Okay, before that, so we will have a live. My network is still bad, so we'll have a live. We will have a live. This can also be used as PPL. Okay. So guys, this is part 1 of your institutional support and resistance. So master this first, and then I will introduce the other ones. So for now, use the PPL, your precise price level, and then I will introduce the other ones later on when you fully comprehend this one, because I don't wanna confuse you with a lot of concept. So you need to master at least 1 or 2, then we can continue.